finally. Maybe not all the way. Maybe not all the way. I think the low of today's move, this overnight session so far, is down at 20,004.
Okay.
So not fully closed yet, but it was a good trading day. How's yours?
I mean, it was mixed. It was mixed. I was finally getting ready, and I used to thinking like, okay, this week, I mean, we could start to see lower volatility, maybe just back to normal, get comfortable for a day or two, and smack, right? My big old red day and high volatility. I was talking about that gap. Everyone knows I was talking about the gap, obviously. If we switch it over to my charts, you guys, everybody in the chat, you can see what I'm referring to. Looking at this daily chart, we'll go through it. And before we go through it, I make sure I do that top step risk disclosure, because everybody should know, even though for some reason traders just comment because they just dramatic. There's our top step risk disclosure. As always, it's for educational purposes only. Everything that I say and go over is it's not a signals class, just education. Shout out Nick for a tick in the chat on some painkillers. Trading on painkillers or not trading, hopefully getting some much needed rest, that's for sure. But
for sure. What's up, Nick?
Yes, this is that gap I was referring to. I was talking about it throughout most of the day today, and I mean, you can see where we refer from, at least I'm referring to, from like 970 up to 20,050, and I've been looking for this gap to get filled since we got closer. And tonight, I already took a loss. Tonight, Coach Jay. Unfortunately, I'll explain it here in a moment. I took not just one. I took 2 losses already tonight, and I might just lock myself out of my live account, which I'll catch some heat from it. But I don't care. It's if I come on, I'm scheduled for fast markets tomorrow morning, and if I go on to fast markets, are you locked up with a loss? I could hear the traders now talking crap. But that's what it is. It's like, hey, last night I seen a couple good trade setups. I took them. I took the loss, and I'm not going to sit here and continue to break my rules, block myself out. And even though some of the hardest trading, Coach Jay, the hardest things to do is locking yourself out, knowing that. You're not going to be able to trade in that live account tomorrow.
Yeah, it is tough. And I'll be honest as well. I've been trying to place some trades in overnight sessions and getting stopped out, and kind of sacrificing opportunity for the daytime session also. So for me, even now, I'm looking at it. One thing I will not do, and maybe I shouldn't be saying this, but on a TopStep account, I will trade a little bit more loosely than I will on my personal account. My personal futures account does not get traded at this time because it's just low probability, and for me, I'm giving away money to the markets, right? I know for you, this is your trading time, and you kind of just pull that all together, right? Whatever my risk balance is for the entire session, right? And that's 23 hours. Wherever that gets spent, then that may mean that I'm locking out for the rest of the session, which is fine, right? If you're going to use that daily loss limit or your lockout, whether that happens overnight for you where you do trade really well, or in the New York session where you trade really well, it's the same concept. So if you get on the stream tomorrow, anyone who's watching can say, hey, why is Dakota trading a live account? Because he's managing his risk. I
lost. And to your point, you're trading at a prop account. You can trade a little bit more aggressively than your personal accounts, right? That's the luxury that we have as prop firms. And I do agree. I do trade more aggressively in a prop account than I do my personal account. And that's the luxury, right? We can have more leverage at a prop. We have the risk managers and all that fun stuff. But here's the daily chart. Let's go through the NASDAQ, and then I'll pass it on to you about the NASDAQ. We'll switch and see these other markets. But this is the gap I was referring to. On the daily, we had a very ugly sell-off here. And what has been resistance, we're starting to see signs of that here tonight. Resistance becoming support. We've seen that near the end of the New York session. And now we're seeing it tonight. And surprisingly more support than I expected. That's why I've taken a loss. If we zoom into an hourly chart, you can see that same gap. I'm going to have that marked out. So, because that's very important to my trades tonight and why I took a loss. So, 050 was the start of the gap down to, 971, right? These are zones. And you can see throughout the New York session, it was just one big sell-off until we got to the start of the gap. We started to see buyers step in, not just once. We came back down, we bought it up, came back down, tested. We bought it up again. This is a nice support resistance zone. You can see back here on March 17th. And again, near the pretty much middle of March, we tested it once, tested it twice, tested it basically maybe 4 times, maybe 1, 2, 3, 4 times. So it was a strong level of resistance. And then when we broke out, that's kind of where we gapped up. We consolidated around this level again, and then we broke out. And then we were just straight down, touched it, seen some consolidation during the end of the New York session. And then tonight when we opened up, we gapped down. So not only did we have one gap, we had 2 gaps to start the slow markets, to start the what do you call it, Thursday's price action. You can see we gapped down, so we had 1 gap, we had 2 gaps going into Thursday's price action. And then as we start to zoom in, so let's zoom into a 5-minute chart. This is where I was placing the trades. You can see this gap down. We went from where we closed around 090. And do I change this? I'm not going to put more lines on the chart, but you can see we closed at 090, and to start this price action at 5 p.m. Central, we gapped down basically to the low of the New York session, kind of where we tried to break into the gap. We peaked below 050, we got down to like 045, and then we sold off halfway through the gap. We didn't fill it. We just sold off to 010, and we rallied all the way back up and filled the gap from tonight. Tested 098, and then right back down. We got as low as 003, so 20,003, and then we started to see a little bit of rally. This was my first trade, so I'll show you what it was. So knowing this gap, looking for this gap to fill tonight, we had some tariff news. There's a lot of mix in the market, and I'm saying, okay, well, we're in the middle of this gap. I ended up getting short my typical size, 5 minis, 5 contracts at 036. I got in short at 036. My stop loss was just above the start of this, so my stop loss was I think at 54. It ran up, stopped me out. So first trade, I stopped out. Second trade, you can see this is where it was. This is where it was. And I ended up getting in short on a 3-bar reversal right here. Short, looking for a push lower. Nope, I got stopped out again. So 2 losses. I'm down $5,000 to start slow markets in my live account. And yeah, I'm not going to trade that tonight, and we'll see if I lock myself out for tomorrow. But those are my 2 trades. They were short in this market, and we have not filled the gap. The exact opposite. We are right back to where we opened the station session.
Good stuff, Dakota. So that gap fill, you know how much I look at 50% retracements in all of my trading. The gap fill that we got was exactly to the tick 50% of that gap, right? Like you said, that 20,010. And if we look at the S&P, it did the same exact thing, right? Exactly 50% of the gap, and it bounced from there. Why the market likes to trade to these equilibrium points, whatever you want to call them, I don't know. But it happens so frequently. We can see it in the S&Ps as well, to the tick at that 50% and bouncing from there. That being said, I kind of do want to take a short in the equities here for what we have.
Do it, man.
maybe I'm not heeding the warning that you're giving here, but if we look at the 3-minute opening range from the session that we've had so far, we're kind of up at these highs. VWAP is at the lows. There's about a 10-point trade potentially back to VWAP here. The question is, where would the risk go on this? And it feels like it almost has to be a 1-to-1 trade in the S&Ps at least. And let me take a look at the Nasdaq. We got 34 points down to VWAP, and I could risk about 25. Yeah, I'm going to take this short. This is just in the combine, but I'm short a 1 lot. And my stop is above. Stop is at 107. And I'm looking for a test of that VWAP.
Okay. I would say I like it, Coach Jay, but there's a reason
You've liked it twice already.
I'm a perma bull. The screw shorting. Heck with these shorting type. Who shorts markets anyway?
Yeah, right. Who shorts markets, right? Especially after a 2% move to the downside. This is a trade that I would take no matter what, though. It's a fade the extreme of the range trade, right? So far, the way I'm seeing this is we're in a range. Is this trade going to work out? I don't know. I don't know, but I'm okay with the risk on this trade for right now.
I like it. I do like it. We're basically, oh yeah. But you know my feeling about shorting this.
Yeah. Yep.
Yeah, let's watch it. I don't mind. We'll get to a few questions right now while we watch this trade play out, and then we'll continue. Like we said, we have a full hour and a half to review crude oil, Nikkei, and gold. But here's another question I wanted to answer, Coach Jay. And I don't mind. Maybe we can have some good conversation back and forth. So, I'm seeing you take more losses than usual, and I've been kind of going through the same thing. How do you keep your confidence in the strategy intact? So, if you've been watching my trading closely, Friday was a winning day, Monday was a winning day, Tuesday was a winning day, and Wednesday. So, I've been having winning days. Tonight was a losing day. I'm down 5,000. The unfortunate thing is, I haven't been going full size, like my regular 5 contracts, and net, like overall, I'm in a drawdown. I posted on Twitter, Coach Jay, you probably seen it. I said, guess what happens? That's what happens when you have transparency, when you trade one account, right? Or the same accounts, if we're talking plural. You don't hide the account number. You don't hide anything. You don't have a strategy that's based off of resets or churn and burning accounts. That's what happens, is you go through drawdowns. That's not what a lot of, that's not what a lot of people see on social media. They don't get to see that, which is very unfortunate for a lot of the new traders, where the majority of what they see is just, green screenshots. And with a sprinkled in every once in a while with a red screenshot and a whole speech of how they messed up and what they need to do better, right? And how I took a red day. Let me see how many views I could get for this, and let me just show everybody how I'm changing and how I messed up and what I'm going to do better for that one screenshot, right? So
talking facts right now. Nothing for me to say here. Keep going.
It's true. It really is. That's what happens. When you trade a single account and you show everybody everything, you go through drawdowns. And when you go through those drawdowns, you have to understand 2 things, and you can correct me on this, Coach Jay, and maybe you could add to it, is the 2 main things I focus on when I'm in a drawdown. I ask myself, number 1, is it me? Is it me as a trader who's trading bad, who's breaking my rules, or is doing something differently that I probably shouldn't? Okay, that's the first one. Is it me? The second one is it the markets? Now, it's easier to blame the markets, but if the markets are trading differently than what they used to during this period of time, then it's up to you to adjust to the markets, right? The markets don't adjust to you, you adjust to the markets. So that reverts back to it's you at the end of the day. At the end of the day, but it's identifying what it is. Like, hey, I'm gonna keep following my same strategy. Should I keep doing that, right? Or is it me breaking my strategy? Or do I need to adjust what I'm doing according to these current market conditions? So I go through that process of trying to figure out what it is whenever I go through a drawdown. First of all, I'm not breaking my rules, am I? And then if I am, then okay, it's not the markets, it's nothing else, it's just me making the mistakes of breaking my rules. But then if I'm following my rules and I'm still losing money, then I have to realize, okay, what I'm doing now and the process that I have for trading and my rules, my process, does not fit these current market conditions. I need to adjust. That's it. And if I don't adjust, then I'm just gonna sit here and lose money. And I've been going through that for the past 3 months now, maybe. It's been. I've had ups and downs, but overall, my typical drawdown is between. This might blow some traders' minds. 40 and 60,000, 30 and 60,000. It just depends on how long the drawdown goes, how my trading is, like how bad the markets are, how bad my trading is. And
I think we've seen it over the course of the year and a half that you've been trading on TopStep TV. I think we've seen exactly that, and then we've seen you come back from that drawdown as well.
Like 4 times, man. I've been through this drawdown. Like I've been trading live at TopStep for about a year and 3 months, maybe. And I've been through, I don't know, 6 drawdowns. Right. That everybody gets to see. And every single time it's the same story. I remember the very first one. I get my live account, I'm trading well, and I'm down 40,000. And my first experience with the drawdown, Mick, head of the risk team, gets on shoulder tap and does a shoulder tap and gets I get on live with him, and yeah, that was a fun one. It's just like, oh, well, this is reality. You can't hide from reality. You cannot hide away from those tradings. When it comes to transparency, then I went through another one in like July, in August, and I went through one in December, and I'm going through one again, and it's just like this. It's just like this. Equity curve does not go straight up, and that's the reality of trading. Anything that you have, based on your own personal experience, Coach Jay, or your own trading?
Yeah, I mean, I would say I agree with you, and I think we've seen it in your drawdowns as well. And it's never the strategy, right? At this point, there's not, I feel like I'm confident enough in my trading strategy when I trade it. There's nothing that needs to be changed at this point. The only thing that needs to happen is I need to execute it well every day, right? So anytime I draw down or things are not going well, for me, I always look at myself first, right? Because the strategy, and the way I've kind of even realized that even more over the last year and a half was, I've explained my strategy to traders, and they trade while using it, right? So if the strategy works, it's not the strategy, it's me. So I have to think, what is going on in my life that might be a distraction? Am I just overly eager or hesitant to execute or whatever it is? But for me, it's always something with me, right? For me, I realize when I'm not if I'm not in the gym, if I'm not like physically active and getting a workout in the morning, trading is terrible, right? Just because I'm not in the right performance mindset to trade really well. So I think if you have a strategy and you've really, tested it, you kind of foolproofed it, you understand when it works and when it doesn't work. If you're at that point and you're in a drawdown, check with yourself.
Yeah, I tell you, guys, check with yourself. What is your strategy, Coach? I heard you talking about an AI. You was using ChatGPT or something, and it knows your strategy.
Yeah, so my strategy is all volume analysis. It's all volume based. It's reading the tape, reading order flow, and making trading decisions from there. I think today, if you watch Fast Markets, was a perfect example of that. Where even right now, right, I'm looking at order flow. I'm using VWAP, and someone says, "Hey, how's VWAP order flow?" Is the volume weighted average price is moving higher than it? VWAP's a flat line. There aren't any. So the way I'm reading this is there aren't any convinced buyers up here, so I'm fading that move. But yeah, it's all volume analysis. I think anyone who's signed up for the 150K celebration that TopStep is doing, when we go through technical analysis, for me, it's all volume based. So if you want to learn anything more about volume, we'll explain it there. But it's all volume analysis.
Yeah, everyone's looking at you fading in and out on the camera. It's me adjusting some settings. Like I said, I've been having trouble with your settings, Coach Jay. It looks really clean. When I'm looking at it right now, Coach Jay looks like 4K resolution. But every once in a while, it kind of just starts to get blurry. So I have to come in and do like a refresh. I don't know what it is. It's I'll figure it out sooner or later. Maybe next year, this time, we won't be having this issue.
Yes, it's been a while.
How's that trade? You're still in the short from 82, right?
Yeah, I'm up about 10 points right now. Looking for my target is at 20,046, but we'll see if we actually get all the way down there.
Andrew, get out of here. Oh, man. Well, I like this trade. I mean, I guess while we were waiting, let's go through these other markets. Let's take a look. Let's go through, switch it back to my charts, and let's take a look. I'm going to look at crude oil. I haven't traded crude for a while. They was asking me about it earlier on the day show, whether I was bullish or bearish. But on the hourly chart, you can see we did come up here into the $70 a barrel level, and I'm actually a lot more bearish than bullish here in crude. Now, I've been saying about the seasonality of crude oil that sometimes we do tend to see a rally going into the summer, the late spring, summer months. However, this is a key resistance. That $70 a barrel, it's a big round number. It's the top of this range that we were in for most of fall. We're at the top of it. You can see that there was a level of support here throughout the end of January and February. Resistance. I mean, I would not be surprised if we see another down leg here in crude, and maybe we look for an opportunity to buy the dip. It's been buy the dip mode, right? Higher lows, higher highs. But I'm less tempted to look for longs up in this zone around 70 than I would be for shorts. Shorts are more attractive to me in crude up in this level than longs. Now, doesn't mean we can't break out, and the next level I would have would be like 72.50, these 72s in order. Yeah, that would be the next level I have. Thoughts?
Yeah, so on the daily in crude oil, 200 moving average on the daily is at 70.25, and that kind of was the high for the day. I'm looking to buy crude, but probably not here that close to that 200 moving average. If we look at a 30-minute chart, the 200 moving average is down at 68.86. So if we get down towards the 69 level, nice, I will be looking to maybe buy there.
69 what?
69 evens if we get down there. On pullback, because we're so close to 70 that if I buy it here, there's 20 ticks available before a potential level of contention. So if we pull back to 69 and looking to buy there, I think that gives a better risk reward trade.
That's the best price to buy. Let me take a look at. I would say you crack me up. Okay, let's move on. Nikkei. Last night I was looking for a break up higher. Pretty good at buying these tops. I tell you what, Coach Jay, I was looking for a break out of 38,000. That was the top. We've sold all the way down to 37,300s, and I mean, tonight we're seeing some volatility. We have been in this little bit of a mess. I was looking for this to be maybe a cup and handle if we were going to break. We failed that, and I'm not seeing anything right now. We're just kind of right in the middle of this range, I guess. We failed to break out to the long side. And I think I'm going to pass here on the Nikkei and move on to the gold. Coach Shoop and everyone loves talking about gold, and I understand and I see why. I'm bullish gold. I do believe that we can make a run up here to these 30s, these 3,030s, and I think we have a chance to make a run at all-time highs. I mean, I'm seeing this market as holding up these higher lows. We're holding this trend. We're holding this nice little trend line that we've been putting in. We're making equal highs. This is a major resistance zone. It was a major support. We broke through it. It's been acting as resistance. Maybe this is some type of a triangle, right? Triangle formation. If we break out, then I could start to see us coming up and testing, making a run for those all-time highs. But bullish gold, I don't see a reason why I would be shorting this, unless we do end up selling off. And then maybe if we do break this trend line, the support trend line that we're holding, there could be a reason to short it for a push back down towards the these lows. But as of right now, I do like that. Actually, tonight we just broke through those upper 28s, and we might be seeing these 30s sooner rather than later.
Yeah, the one thing I'll add to that in gold, I kind of hesitate to short gold as well, but gold is in rollover this week, and it looks very much like rollover price action. And over the past 3 or 4 days or so, we've been in this range. And I'm looking at this high volume 30-minute candle that we had on March 21st. It was at 8:30 Central Time. I think there was some news. No, that was equity market open or whatever. But because of this rollover price action, I'm looking to sell gold up at 30.35s and buy it near 30.10s if we get down there for now. And that will end, at the end of this week, right? We saw the equities roll over last week, and we had those 3 inside days because of that rollover price action. That's what I'm seeing gold at now. I haven't traded it this week because of that. I think I placed 1 trade, but I haven't really been looking at it because of rollover. Makes sense.
Yeah, that completely makes sense to me, Coach Jay. I know Coach Hoop. I need to get him on for slow markets as well. And I'm not seeing any other trade, to be honest. Just so everybody knows, I finally got them to reset my coach's combine for slow markets. I'm only going to be taking trades in this for my slow markets class. So all the statistics that you're going to see in this combine are going to purely be for slow market setups. I'm going to be placing trades, holding them overnight, setting them up, talking over through the slow markets class, and it's only going to be this. Then we could, like Coach Jay and I do on Wednesdays, we're going to be reviewing trader statistics. And if you want us to review your statistics, go ahead and click on your performance stats, click on share, and then copy this link, send it over to the TopStepX Discord under Coach Jay or I's Discord channel, and we'll review statistics last 30 minutes of the class. So in about 30 minutes, we'll review some. I already have a couple lined up, Coach Jay, but yeah, that's what I'm going to do. This is my slow markets class. Traders been asking me, there's been so much volatility and so much opportunity overnight, and hopefully I can demonstrate, how can we capture this? How do we put trades on? How do we leave them on overnight? How do we manage it? Where do we put our stop loss? Where do we put our take profit and all that? So in this account, we'll see how that goes. We'll talk about risk management, and maybe we go through and review statistics and keep this account open for, not just weeks, but months and beyond, and going through and improving those statistics.
Nice. Good stuff. I like that. This trade, Tushar asked a question about this trade. Why do you believe that NQ might sell off to the VWAP level? Incidentally, the VWAP is also at the lower Bollinger on the 3-minute, but we have been above the median for the past 2 hours. Why do I believe it? It's because I have traded this trade hundreds of times, if not thousands at this point, and have seen it play out. Do I know that it's going to work? I don't. But it's just I'm willing to put risk behind this idea. I don't know for a fact that anything's going to happen, but I'm willing to put risk behind this idea, and that's really all we can do.
Yeah, I mean, that's kind of what trading is, right? You never know for sure, but statistically, based on your trading, based off your setup, based off of how you view this market, what you use to trade, you put risk behind a setup, and the market either goes up or down or sideways, right?
Exactly. Can't do anything other than that.
Yeah, I mean,
if it does something else, we're in trouble.
Tonight, I was caught looking for this weekly gap fill down to 970s, and everybody else, I know, trust me, I know there's a lot of traders in the chat that was probably looking for something similar. I know a lot of traders, not only in the chat, but that trade their own personal live accounts as well, that were looking for the exact same thing. We just did not get it yet. Yet is a big thing. Tomorrow's a new day. Tonight's price action's Thursday. We could easily, wait until, tomorrow during the New York session, or even Friday. Heck, gap might not even be filled. We might never fill this gap. We've got through.
Never do it.
Yeah, you just never know in these markets. The only thing you really know is they roll over, and there will be a tomorrow.
Yep. Yeah. And if there's not, we got bigger issues. You said something today on TopStepX TV, and you said, maybe this gap never gets filled. And that's a real possibility, right? If that's the low of this move and the markets just rally from here, make new all-time highs and never come back to these prices, it's a real thing, right? So it's saying anything definitively needs to happen in the markets, especially when we don't control them. I mean, if you do control them and you're in the chat, let us know where we're going. Let me know if I'm going to get this profit target on this trade, but we really have no idea.
Yeah.
David Green said that today, right? It's like no one knows anything.
Yeah, I mean, I was looking for this market to bottom around 20,080s, and sure enough, talking about this one question I want to answer. How do you deal with live orders getting hunted? So to me, that's a theory, because honestly, market makers, nobody cares about anything less than 50, 100 contracts to say I'm going to hunt your order. I'm not a believer in that a specific market maker or anybody will hunt your live orders. However, I am a believer that bigger traders and traders that move markets, like institutions and traders, 1,000 lots that we see coming in, they know where liquidity is and they know how to get filled. So if let me walk. This was a beautiful example, Coach Jay. I don't know if it happened when me and you were on or if it happened during Power Hour, but let me show this as an example, because this was a perfect one to that question. We don't know whose stop losses are where. Nobody knows that. However, institutions, market makers, the market gods, whatever you want to chalk it up to, they understand where people put stop losses. They understand technical analysis. They understand what I talk about. They understand what everybody looks at. They understand, moving averages, VWAP. They get all that. Everyone's seen this gap, right? Very simple, very straightforward. Everybody see it. Me, you, hedge funds, institutions, Jim Cramer. If this homeless guy down the road knows charts, he probably seen it as well. The thing is, what do you do? What does this mean? Well, if we take a look at the price action from today, and you've seen, traders who was buying the market maybe in this zone, maybe traders who were buying the market anywhere, there's a pretty good chance that they had their stops just below where that gap started, right? There's also a pretty good chance that there's a lot of traders looking at it, and that if we break, traders are going to sell it. Traders are going to sell it, thinking that we could fill this gap. And so it makes sense that there could be stops there. There could be traders entering in short positions. And sure enough, during the New York session, if I zoom into a 100-tick chart, you can see it a lot cleaner. Take a look at this. Here's that gap. It was at 20,050. That's where the gap started. We came down. We tested it once, right at 148 central. We rallied all the way up. We rallied up. And we came down. And we tested it again. Hit it to the tick, right? We hit it to the tick. Yep. And then we rallied up again. And sure enough, right 7 minutes into the power hour, we broke it, consolidated, reversed, and rallied up, right? That, to me, was a run of stops. There's a lot of traders with stop orders there. That's probably why we seen a gap like that. Boom, bunch of orders came in. This is 100 ticks, so 100 transactions. There's 1, 2, 3, 4, 5, 6, 7, 800 contracts that got filled at this level and then straight back up. So that is what I refer to as like a stop loss hunt, liquidity run, whatever you want to call it. And then we didn't see it, right? We went up and we never did get back down there for the rest of the New York session throughout. I mean, look, see that? All the way down there? Well, and it was up since. And that is, you can't do nothing about that. It happens. Stop loss is a better entry. I've been saying that for December because it's been happening to me. And if you was watching Top Step TV, I was with David Green and Andre and Dobie. I bought 54 on the way up. So I did buy right here after we ran that. And the next time we were back down there was when we gapped back down. When we gapped down tonight during this huge gap. We still haven't even filled that gap. Like you said, 50%. But the markets tend to do that. I don't know if it did it in the ES. ES is a lot more tame. You'll have to go through and double check. But it's not any individual or company or hedge fund or market maker hunting your specific order. It's just a general markets. You look at it tonight since we opened, maybe the same thing happened. You can imagine we gapped down. There's the low, right? We rallied all the way up, and guess what? We barely broke the high of where we closed and then sold off. We came down. We barely broke the low. Not once. We barely broke it again, just by a few ticks, few points. And that happens more frequently than I wish did, because that makes it tough. It makes it very, very tough for a breakout trader where you're trying to play for a breakdown and a breakout, right? And catch that momentum. This tends to just be difficult for me personally when I'm looking for a breakdown and a follow through, especially to fill the gap. I can only imagine traders who thought this gap was going to get filled already down to 997, down there, 19,997. That's super tempting. Yeah, get short. We're going to break down, go all the way down there. Nope, just joking. And then it's like, hey, get short. We're going to break down. No. And here we are on the exact opposite, pushing the highs of the session. So,
yep.
It's nobody's out there to get you. Nobody is. It's
also, think about what a market maker's job is, right? Especially if they have a ton of size to fill. Dakota, I asked my VIPs this. They asked me to give a volume lesson yesterday. If you had to trade 1,000, I was doing some art over here so we could help with the example. But if you had to trade 1,000, let's say you had to fill 5,000 contracts, right? Where you're being asked to build a position. How do you want to build that position? You got to fill 5,000 contract position.
You're not market ordering in. That's a fact.
Correct.
You're not going to market order in 1,000 contracts because you're pushing this market up way too much. And if you get an order to fill, say you want to buy 1,000 contracts, and you get a specific price, right? Like, Nasdaq's trading around 20,085. Give me 1,000, right? You don't just jump in at market because your average fill price might be 20 points higher, 1,000 points higher, or not 100 points higher. Let's just say that's especially during this time. You slowly build the position. That's option one.
Right.
Slowly get in, like what? Oh man, that'd be a horrible grind. Buy 10, buy 10, buy 10, buy 10, buy 10. You'll be there forever, and the price could be dramatically different by the time you get in. You do, to me, and what I believe is, you find a way where traders are getting into this market in the opposite direction that you want to get in, and that
find the most fish.
Breaking out when you can see traders looking for a breakout to one direction, where stops are, where traders are jumping in for a breakout trade. Would probably be the easiest way to find that many contracts.
Yeah, and if you know that's where the most. If I got to fill 1,000 orders and I can get them all within a 5-point range by pushing the market and making it go to that 5-point range where everybody has their orders, I'm not targeting you specifically. I just need to get 1,000 lots filled, and I don't want to do that over 100 points, right? Because then I got a really bad average on that trade. I want to try to fill as many orders as I can in a small enough range, and that's why we see a huge. Normally, when we see those stop runs, it's a huge volume spike, and then it just dies off from there because I did my job. I got the orders that I filled needed, and that's it. Right? We find the next spot where there's a ton of fish. So don't be a fish. There's sharks out there.
Lesson of the day: don't be a fish. Last night, if you watched any of it last night, when I was getting short up there, I was short 20,518 or something. Which is funny to think 500 points ago. I was seeing those sell limit orders come in at the ask, and they were getting filled, right? So, and it wasn't just once. There's like a few of them. So there's also a level of urgency. Like, how urgent are these bigger traders trying to get in? And the funny thing is, it happened right before this huge market sell-off. 2 weeks ago, Coach Jay, when we seen those big orders coming in at the ask as well, was the night before a big market sell-off. And sometimes orders don't always get filled. I always wondered whenever we see 1,000 or 600 big contracts come in on one side or the other, and then they pull them, if they're trying to get filled in a different way, where they put like 800 above the price, and then as price is approaching it, they're hurrying and they're selling 400 or 500 at market as it gets up there,
right in front of it.
And then when they're filled, they just pull it.
Yep. Yeah, I'm sure there's a ton of tricks. I wish we could get somebody on that maybe filled orders like that back in their day or something like that, because it's really interesting, right? You have to play games, right? Somebody asked, why not just have a 10,000 limit order sit at one price so it can get filled as much as possible before it fully just rejects. So think about that, right? If I needed to trade 10,000 contracts and I put 10,000 out for the market to see it right at 20,100, I put 10,000 contracts there. If you're a buyer, right? If we're all buyers and I'm buying for a breakout at 20,095, and let's say I'm buying 3 contracts, right? So, okay, sure, I can buy 3. Dakota, you might buy another 10, right? So that's 10,000 minus 13. We need 9,987 more orders to fill all of those contracts. What's the likelihood that we get that if we know that, hey, there's 10,000 contracts here, and if I buy it at 2095, I only have 5 points available before a major level of contention. So what happens then? If it's too much size, the market just runs away from it, because it's just like there's no value to me buying right here if somebody's selling that much. So I'm just going to run away from it. So they try to hide orders that are that big because the market usually gets scared of them if the order is that much.
Yeah, exactly. We have the luxury of having Peter Tuchman on Mondays and Fridays.
We gotta ask him.
Should we ask him?
Yes.
Let's see if we could get Andre and everybody to ask and say, hey, can we ask Peter Tuchman how big traders feel those? We have to figure out a way to ask him that, though. Peter has a lot of energy, and I definitely have to ask. Like, hey, Peter Tuchman, if you had 1,000 contracts right now to fill, how would you fill them?
Right.
That would be a question.
I think it's a great question. Yeah. And he's going to answer it as much as he can, right? He's not going to give away,
of course,
the trade secrets, but I think it's a great question.
I remember hearing him say, like, because he trades for some big companies, probably bigger than what anybody here realizes. To be honest, like, yeah. I remember he mentioned on TopStep TV, it feels like it's been 6 months ago. He's like, yeah, I threw some into the algorithm, and then he went and filled some manually. So it's like, if you have 1,000 contracts and you fail, you throw 800 of them in an algorithm that, I don't know, you see someone named Dan says TWAP, algo orders, and they use some type of algorithm to get those orders filled, and then you fill so many manually. I'd be curious to see what Peter says if you say, okay, Peter, if you had 1,000 contracts right here, right now, how would you get them filled? He'll probably have some smart answer, though, like, what price do you want? He'll say, I'll market them all.
Right.
We'll crash this market.
Right.
Now that has me wondering. Or asking the mechanics behind filling large orders. Just guess. I think market makers and institutions have common ways to make price actions. Is that copper?
Yes, it is. I was just thinking. Someone brought it up, and we were talking to D earlier during At the Buzzer, and saying that this was a liquidation move up here. Is what it looked like at these highs. That's the all-time high in copper, right? So talk about a margin call. Someone looks like they just got blown out of that position on probably a short. And so now, right, I mean, look at this. This is a 3-minute candle. The complete rejection, like 3,000 contracts traded, and then that's been a resistance. That zone has been a resistance the entire time. And now we're seeing some bigger selling. 15 minutes ago, I was thinking about, hey, taking a copper short, and we just saw some volume come in here. So I'm gonna watch this and maybe put on a copper short.
Okay. Oh man, last night, the night before, we watched that thing just rally so hard. It looked like a meme coin. Is this like the meme coin dump right here that we're seeing?
That's what it's looking like. I mean, these are all-time highs, and if we zoom out, we've been up here in 2024 and 2022, really. So do we get a pretty strong pullback here in copper? Maybe. That's a very ugly daily candle if you're a buyer.
I almost want to switch to a practice account and trading copper. I don't know how I thought. I've never traded copper before.
How about placing copper trade? And there's micro copper also, right? You can trade MHG.
Okay, that's probably the best. It's always best to do that. Man, that did happen. It was just in 1 second, right? That
was yep. Right above, made a new all-time high and then sold off from there.
Okay.
Some traders saying the move already happened, maybe.
Well, last time we had a big move like this, we reversed it. So I'm going to buy copper right here.
Okay.
In a practice account. I'm buying it in a practice account, and yeah, let's do that. I'm going to switch to my practice. Not my slow markets, practice. I'm going to look at ticks because I don't know what points are for copper. So I just bought. Oh wow. Okay, we're going to find out what happens here. There you go. I'm going to risk 13 ticks, and I'm going to see if we can make maybe back up to where I don't know about where we dropped. Risk 13 to make 19.
Okay. How many did you buy? 15.
Yeah. It's not too bad. Yeah, risking 13 ticks. Risk 2,400 to make 3,500 on this one.
Nice.
Wrong account. No, it's the right account. I double checked. It's just a practice. I'm not doing it for my slow markets. This is not a slow markets trade. This is my 1 second. 1 second. I thought it was 100 ticks. Let's go to a 100 tick chart, and let's see if we can catch 19 of these ticks.
You know what I like about this, Dakota, especially doing this in the practice account? You've never traded copper before. You've been talking about being in a little bit of a drawdown or whatever it is. Sometimes just going and placing a trade somewhere else. I remember last year I had like 2 weeks where it was just like not great trading. Felt like I could not get a good read on the Nasdaq at all. And then I went and coached Vince's Discord chat, and somebody was asking about trading RBOB, gasoline futures, and I've never traded it before. But he was talking about it. I pulled it up, and just from a technical perspective, it was like, oh yeah, that looks like a pretty good trade. Put it on, immediate winner, and I was just like, oh, this game isn't it isn't as complicated as we try to make it sometimes. I think we spend so much time with the instruments that we trade, and for good reason, right? Because you're able to pull money out of it, so you want to keep going back to it. But every once in a while, we might have an opinion or just not see it clearly, and then going and just looking at something else, right? Like you just put on this copper long, and it's a perfect trade, but you know nothing about it. But what you see from the chart.
Yeah, I mean, it's pattern recognition, right? We take a look
Right.
and we see what did we do is when we had this huge rally and spike up, we completely reversed it. I mean, I don't trade this market, but you could see these big moves are followed by not a complete reversal, but a pretty decent reversal. So we had that big move, this big sell-off, and so I'm looking for just a reversal right back to maybe some level of this was support, and maybe the support will act as resistance. That's why I have a take profit at 2250, and
Nice.
yeah, I risk 750 now. I moved it, risking 4 ticks right now, looking to make 19 in a practice account.
Nice. Yeah, I think that's good practice. And for anyone that's listening as well, try that. Right, if you're struggling in the market that you trade every single day, pull up another market and just something that you have no opinion about, you've maybe never traded. Pull up the Swiss franc chart and see if you can just apply your strategy because you don't know anything about that market. If you're a solely technical trader,
it's like going into something with a fresh set of eyes, right? Like I have
right.
bias on this market. This is a brand new market. Let's just trade it as we see it right now without bias.
Right.
And so far so good, man. So far so good. Look at this thing.
Yeah.
Looking for 19 ticks. I'm gonna go ahead and move that risk up and see if we get filled. Ask is there. It's asking. They're asking. Might take profit. Oh man. Or I could get more tilted. Interesting. Have you traded copper before?
I think I probably placed maybe less than 5 trades.
Okay, I placed 0, and
yeah,
there we have it. Nice little 19 tick banger, $3,500.
Remember this happened with the Nikkei about a year and a half ago?
Oh, don't get me started on that one. Yeah, that's okay. Enter new addiction. Goodbye, Nasdaq. Hello, copper. Dakota now trades copper daily.
He's making thousands trading pennies.
Oh, that's good. Yeah, nothing's gonna replace the Nasdaq for me, man. That Nasdaq has my heart. Why not? Yeah, why not?
That was a damn good trade right there, man. Practice or not, that was a good trade, right? Good read. Hey, and it was a very simple analysis. Last time we had a big move like this, it reversed, so I'm gonna buy it. And it worked. It could be that simple, right? It does not have to be this huge psychological journey for figuring out a trade. It's like, hey, it did this last time. Why don't I just do it again?
Don't make trading sound that easy, Jay. Come on.
I mean, okay. Can a coin flip strategy work if you manage your risk, Dakota?
I'm gonna say yes. I will completely agree that a coin flip strategy can have a positive expectancy if the risk is managed effectively. I will say that can be a true statement.
Money to do that, but it's possible if the risk is managed right. No.
And vice versa. A high win trading percent strategy can be not profitable if risk is managed ineffectively, wrong, right?
Yep.
So it works. I think you see better traders and you see positive expectancies from the way that people manage risk, not win percentage, not risk reward, but managing the risk is where I think the special sauce is, or the golden goose and whatever they call it. It's in how a trader manages their risk in their strategies.
Yep, 100%. So there was a question from Charles Benitez. Coaches, is it possible to have a profitable system with a 1-to-1 risk to reward, or are you inevitably going to fail in a losing streak? Is 2-to-1 a minimum? It is possible, but your win rate needs to be, more than 50%. You can't just look at risk to reward. You can't just look at win rate by itself. It's all of it combined. So if you're winning, all of your trades are 1-to-1, and you're letting it play out 1-to-1, you have to win at least more than 50% of your trades.
Yeah, exactly. 51%, right?
Right.
51%, and but the hard part is, can somebody place a trade and just let it play out without over managing it and do it over a long period of time? I mean, everybody knows everybody can flip a coin 100 times, and they know that eventually one of these times heads could come up 5, 6, 7 times in a row. It happens. Like, that's the reality. And the question is, can somebody stick to a strategy after 6 losses in a row with the same confidence? And that's more difficult. Somebody could flip the coin knowing that it's 50-50 the very next flip without lacking confidence, but it's harder for traders to keep trading their same strategy after they're in a losing streak, thinking that it's still a valid strategy. They question themselves. They question that they double guess. They struggle. They get to their own. They self-sabotage. And to that, there's a trader in the chat that said TopStep needs a 1-day pass. No, please no. I am so against it. I don't own the prop firm. I don't own anything, right? I'm solely a partner, and I would never want any prop firm, even any prop firm, insert any name, any competitive prop firm, anybody, to have an evaluation where a trader can pass in 1 day and then give them access to funds. No, not just no, hell no. It's insane. It's like flip a coin. If it's heads, you're a successful trader. If it's tails, you're a loser, or you're an unsuccessful trader. And then you have only 1 data point to evaluate a trader. No, that's insanity.
It's not enough information.
No, I mean, it's hardly enough information. It's like saying I'm a good trader based off of a single trade. In no way would I ever say, guess what? I just made a successful trade in copper. I am a successful copper trader. You should back me by your funds because I'm a successful copper trader. There's no doubt. You can't question that. I made 1 trade and I'm successful. Wrong. It's more about consistency. I can make an argument to say the most important statistics in an account is how long it's been open.
Right.
How long has that account been open? Like, what does it look like? Can you break even for a year? Can you?
I'm gonna be on with Coach Ray tomorrow, I believe, for the opening call. And I don't think he gets to get on YouTube enough and kind of talk through his strategy and stuff like that. So I'm excited about that. But Coach Ray has had his live account in TopStep for about 5 years now.
And
no one ever talks about it. because he doesn't go for huge profits in the account or anything like that. He consistently takes payoffs from it. He's had that account for, I'm pretty sure it's 5 years now, and he's gonna mention it tomorrow when we're on, because every time I get to work with Coach Ray, I mention that so traders know. But talking about account longevity, he is a model of that. And there was somebody who said Jay wanted to short, so Dakota took a long and won. Here's proof that both people can be right. Dakota bought copper down here. I sold it up here. I can take $50 from this right now. So don't be so convinced or like so eager to fade people. It doesn't matter. Right? Dakota, we did a handoff the other day, right? You were short the NASDAQ. We were on the other day. You were short. As soon as you got out, I bought it. It's actually a really good sign if instead of trying to fade someone, you wait to see when they take profits, because it could present a great trade opportunity for you as well.
Yeah, 100%. Yeah. Andrew says maybe I should write a book. I've never lost while trading copper. You can too, and I could sell it. 100% win rate.
Dakota, the copper baron.
Yeah, I mean, look at this. Look at this. Look at these statistics right here. Let me show you this.
I mean,
look at these stats. Stats don't lie. Stats don't lie. The #1 copper trader in the world. Look at this. 100% win rate. Copper. Boom. The hydrogen trader. I thought HG was hydrogen gas the other night, Coach Jay. I don't know where I got it from.
You're looking at a periodic table, and that's definitely not hydrogen gas on the periodic table.
I know. It's just, yeah, abbreviations is in my mind. How I made thousands trading pennies. There we go. There we go. There's my new book. How I made thousands trading.
You sell it for $100, but you can only take payments in pennies. So you gotta get those rolls from the bank.
Peter Rant disagrees. I don't know. Yeah, no comment. NASDAQ selling. You're still short NASDAQ? Coach Jay?
I am. Yep.
Switch it to your charts.
But I'm a copper trader now.
All we do is make money. All we do.
Yeah, I'm still short the NASDAQ, 20,082. It's really kind of just stuck in this range right now. I would really love to see some selling below 70s, but the volume is kind of just dying out here.
Yeah. Someone says, Coach Dakota, is it true that you have a full-time day job? Yes, it's trading. Trading is my full-time job. It has been for quite a while now. I mean, I've had other jobs outside of trading because I've only traded 2 hours a day, and so the other 14 hours of the day, I found something else to do, and I really enjoy it. I could list everything I used to do or I've done on top of my trading, because remember, trading, you're not going to be sitting in front of your charts. I mean, you shouldn't be sitting in front of your charts for 8 hours a day. I don't think that's healthy. For me, 1 to 2 hours a day trading is really all you need. But I've worked in the coal mine. I worked at Walmart for 1 month, hated it, and quit 1 month.
You worked at Walmart too?
For 1 month, man. I worked,
really,
and it was the same thing every single day, and I quit. No way. Yeah. But that's when I turned 16. As soon as I turned 16, that was my very first job. I worked at Walmart, was there for a month, and quit. I went to the coal mine. I worked at the coal mine for 2 years. Remember, this is while I'm trading too. Okay, I had internet. I had internet at the coal mine. I did paperwork. I also spent some time underground as well. Yeah, and then trucking company. I never drove truck. Had 5 trucks. You know, some of them were owner operators, contractors. We hauled potatoes from Idaho to Texas. Man, we hauled a little bit of everything. See some crazy stuff in the trucking world. And then helped a friend start an international supply chain that I did a lot of contract work, and they've reached over $100 million worth of revenue a couple years ago, and it was just a few traders out of the base, not traders, people out of the basements. And so I've worked with companies in the likes of Chuck E. Cheese, working on their supply chain, Carl's Jr. If you are from Utah, you probably know a lot of like Thread Wallets, Pura, but the big names are that. We've even worked with like Walmart, Carl's Jr. and Chuck E. Cheese on getting their supply chain set up. And I've done a lot of big contracting work in the supply chain industry. And I ran a team, if you believe this, Coach Jay, ran a big team out of China, Vietnam, and Mexico. So
really, I heard you speaking Spanish the other day in the chat.
Yeah. You'd be surprised at the level of technology the ports in China and Vietnam and Japan are compared to the ports here in the United States.
We were talking about that right when the ports were getting shut down, right? Earlier, was that late last year?
Yeah. Yep.
We were talking about the technology. Yeah, I think you showed me some videos. It's crazy.
Yeah, and so I spent all that time all while I was trading for 1 or 2 hours a day. And if I had to pick anything else, 2 hours a day is all I need. And other than that, I'm always going to find things to do. I'm still doing some contract work in supply chain that I enjoy. Whenever I have time and they have questions or need help, especially right now where everyone's just scrambling to in the supply chain world with these tariffs. And that's kind of been it. I really enjoy what I do. What countries have I traveled to?
Good stuff.
Quite a few countries. My favorite by far is Peru. Spent a month in Peru.
Nice.
I was not a prize fighter. I do boxing. That's more like a hobby of mine. Been boxing for a while. Never professional fights. I've been almost in some amateur fights, but the hardest thing for me about boxing is the weight. The weight. Not worth it. I like to eat.
What weight class would you box in?
It depends.
Yeah.
I started boxing very young. And right now, the last decent bout I actually had, 170s.
Okay.
Right now I'm sitting at 189.
Gotcha. So what is that? Is that middle? Or light heavy?
Heavier, man. It's heavier. I don't like to say it. It makes me sound. You don't realize a lot of the boxers are so small.
Yeah, they're tiny.
Mayweather?
So small. Is like 130 pounds.
Yeah. I'm Danielle said light heavyweight. But cruiserweight, Walter Ray Williams Jr. I mean, I look up to Walter Ray. No, Roy Jones, not Walter Ray. Roy Jones. Canelo is small too. Yeah, they're small. The camera makes them look big. Yeah, anyway, let's go over some stats. Let's kind of change the topic from boxing and what I do for a living, and let's take a look at some stats, Coach Jay. Do you have any that you want to review? I'm going to pull up one on my end. This is one of my VIP members, so shout out to this trader. Let's see if I could pull it up. I said I prioritize my VIP team. Let's look at that while you find. Okay, here we go. Let's see if they're still sharing it. Oh, come on.
Yeah, for whatever reason, these aren't loading for me.
They're not loading for me either, Coach J. You might have to.
I think Coach Wu did say that earlier.
Okay, if not, I still have this. This is one of my traders. There's not much to review, man. When you win every day, what do you? And I can't really see it on this, but it says up to 1 mini this morning, pushing over 200 mark with half the trade number ish, 9-day heater overall. Going through trading small. I tell you what, Coach J, I'm gonna keep saying this every single time. How do you get traders to size down?
I don't know that you can get them to. I think you can mention the benefits of it and continue to do so, but ultimately they have to realize it at the end of the day, and be willing to do it. Right? I think we talked earlier today about giving traders some suggestions, and maybe there being some initial hesitation to doing it, which makes sense, right? We're asking you to do something, right? Think about it, if you're on the coach team or just listening here and he's saying, hey, trade 1 micro, he's asking you to do something for however long you've been trading, you've probably never done. So it's going to be uncomfortable, but I think we learn in those uncomfortable moments. So just try it, right? Are you going to be, are you going to have to lower the expectations for outcomes of trades? Yes. Are you going to have to be more patient? Yes. Are you going to learn how to trust your process? Yes. So I think there's, in a shorter time frame, we might have to lower the earning potential that we think we should be getting. But then you gotta ask yourself as well, am I actually maximizing all of my trading time, or am I just kind of spinning my wheels here? So it really is up to the trader at the end of the day whether or not they want to take the suggestion. Me and Coach Robert talked about that last night as well. But all you can do is put the information out there, Dakota. It's up to everybody else to try to take it.
I know, man. It can be disheartening. It really can. I'm just thinking, how can I just get it through some traders' minds, like size down, and then just what could be going through their mind when they don't size down, and then they end up blowing the account, and then they and it's not like I'm saying it for no reason. What drives me crazy is sometimes seeing traders, whether on social media or Discord, be like, yeah, they just want, don't listen to a coach that the firm profits from your losses. And I just how do you reply to that? I'm just thinking in my head, how's that remotely beneficial for me as a coach, for my VIP team to lose an account? How's that? There's no benefit to me in the way I view this here at TopStep, because TopStep's really trying to get traders into live accounts, and then make money in live accounts. That's the ultimate goal. That's really what traders want. Every single meeting I've been in, Coach J, every single meeting I've been in with you as well, Coach J, has been the same thing. It's the same thing. How can we get these traders to efficiently make money in the combines to XFAs and ultimately the live accounts? And whenever I hear those comments, I'm just like, at first I think okay, where are they coming from? What thought process? What has happened to that trader to make them feel like that? Do they truly believe that us coaches here at TopStep really are pushing them in the direction to blow their account so they could get resets and keep pushing money into TopStep? And then I'm just thinking, if that was the case, what's the point of why would TopStep never mention that to any of the coaches? Why are we doing these VIP with the single goal of how do we increase the pass rate, and how do we keep these traders in XFAs longer, and then how do we get traders into the live accounts and then make money in these live accounts? And then all those conversations that MP's bringing up on TopStep TV, on all that, and the fact that every single one of us as coaches preach size down. It doesn't matter about passing a combine, and telling traders the exact opposite: size down and keep your combine and XFAs open for a longer period of time. It should be opposite. We should actually, if it was true, I would think we'd be in here saying, yeah, 1 day pass, let's do it, size up, let's make money.
Yeah, what my approach is, Dakota, and to me it's even crazy that we're, even thinking about it, when people say that, it's like, oh, these guys just want people to pass to blow combines. Honestly, now at this point, it used to bother me before. Now it doesn't, because I just think that, ultimately just in the world, there are going to be people whose main goal is to discredit anything that they don't, believe in, for whatever reason. I'm not sure why that might be a default mode of operation, but any meeting that I've had with TopStep, and some of them are programs that might come out in the future and things that TopStep is working on, where where we hear about, hey, discounts, how can I buy more accounts? Any meeting that I've had with the internal team at TopStep has been, how do we get traders to spend less money with us and make more out of the markets, right? Because that should be a focus. And I ignore it because it's just a goal is just to get a reaction and things like that. I don't think we have people in the audience that are doing that here right now, but if that's your thing, do it. But I think there's enough of an audience of people that are actually trying to help do this, because we understand how difficult it is, even for all of us, that I can't spend my time trying to force people to fail. That would be I'd be an evil person.
Order filled.
I can live with myself. I can live with myself. Everyone sees it. If I really was going down that route, I probably wouldn't be at TopStep. I'd probably be pushing some affiliate code, trying to get money for that, or maximize my profits for taking advantage of an audience, right? New traders that might not know better. But yeah, no, I agree. I mean, we always are having conversations. We're always talking with these coaches amongst ourselves. We're finding ways, and that's just been my biggest hurdle. Is how can we just get traders to size down? I hate seeing traders blow an account in a day. I hate seeing traders blow an account for 2 or 3 days. I just look at that and it makes me feel bad in a way. It's because I put myself in that trader's shoes. You don't know what that trader's going through. Everyone goes through their own journey, and sometimes you hear stories about, hey, I have a family, I have kids, I'm really looking at doing into this, and I'm putting all my any free time and effort to really be get that financial freedom that I really want for myself or for my family. And $100, $50, $150 means a lot to more people than what maybe we realize. TopStep International, and yes, somebody in a different country, $50 means a lot more to them than it does to me or you, Coach Jason here, where
order
filled. I don't want to say pocket change, but yeah, to some people that could be pocket change, and some it's a weekly, or dare I say a monthly wage.
Right. Yeah. This sounds like a PBS after school special, but we just want to see as many traders succeed as possible, because it's it's a very difficult thing to do.
Yeah. The bullet says, how do you get traders to size down? That's easy. Don't allow minis on a 2K balance. If I was in control of all my VIP members' accounts, I would put a max contract size of 5 micros. There you go. That would be my thing. Coach Dakota, you guys could say it, you could shout it, you could criticize me, but my number one thing is no more than 5 micros for any of my VIP members until you start showing consistency. Now that's different, right? Learning, building your process, trying to get your process, and then actually showing that consistency. Once you show consistency and feel confident in your process, screw it. Size up to a mini, size up to 2 minis, then 3. Then it doesn't really matter, right? That's the point of learning. But then when you can't keep a dang account open for longer than a week or 2, size down. You don't need to be trading minis.
Right. And I'm trying to decide whether or not I want it. So the original draft says we're having this conversation. TopStep does not want to see as many traders succeed as possible. The rules prove it. So here's the thing. If TopStep is going to put money in a live account, and I'm speaking for myself here, I'm not representing the company. I'm thinking if I was running my own prop firm, I actually don't want as many traders to pass the evaluation as possible. I want as many good traders to pass the evaluation as possible, right? And I think that's why the rules were what they were early on, right? And they've become more competitive. But if it was me, I don't want as many people to get through the door, because then there's a lot more variance, right, in results. I want as many traders to succeed when I give them live money, right? I don't want a million traders to pass through a combine, right, and get into a funded account that I actually have to put risk behind. I want as many good traders as possible to put real dollars behind, because at the end of the day, there's a profit split, right? So if I'm running my own firm, that's how I would want it, right? So it's not intentionally wanting traders to fail. It's not that at all. I want as many good traders to get through my evaluation so I can say, yeah, I feel comfortable giving them money. Hopefully that makes sense. Yeah, but it's not wanting people to intentionally fail.
Right. I mean, essentially, you'd want 5% of traders, right? Because what the success is.
Right.
It's kind of what you want, right? You'd love to see everyone make it, but that's not the reality that we live in. You're not going to say, yeah, everyone's going to be able to make it. But I do agree. I make arguments all the time that you could, with my VIP team, talking about my VIP, I even said, if it was up to me, I would only allow traders to trade 5 micros until they've proven consistency. But that doesn't look good from the outside looking in, right? From the outside looking in, all traders want is let me trade as big as I want, give me the most drawdown, give me everything. Let me just go for it. And that's not what you really want to see when someone's trading your money. You have a random person saying, yeah, let me give you, $150, and then you allow me to trade your money, and I'm going to trade however I want to without any parameters. And I want to trade as big as I want. I'm just, no, thank you. I only want to put my money and give it to the traders who have proven discipline with good risk managers. I know Mick's talked about it a lot, talking about traditional prop firms, talking about all that aspect of risk management, and it's true. How would you trade if you're trading a personal account? Does that money mean something to you, right? Like maybe you have $50,000 just laying around that you don't care what happens with, and you put it in your personal brokerage account, and you can trade however the heck you want. But a lot of people don't have that.
There was a question on this trade, next to this trade. Would I add to this? I went, my stop is up at 107. We did kind of just push into 20,100 and couldn't really find any buyers here. So would I add to this trade? How much would I be adding as far as risk goes? Because I don't want to move my stop. If I added another one lot here, I would be adding about another $300 to this. No, I'm gonna leave it for where it is.
Shorts, come on, shorts. Where are they at? Where's this gap fill that I've seen traders talking about, man? We play drinking game. I seen at the beginning of the class. Play drinking game every time we mention the gap. I think. I don't know. I have no idea. I was looking for us to sell off a little bit more tonight during slow markets, and price is telling us otherwise. It's really slowed down. And I'm not seeing any of these other markets make movements. Maybe that copper. Are you still short copper, Coach Jay? That's
keeping me afloat right now, to be honest. Yeah, the copper trade is up $162, and the Nasdaq trade is down about 200. So if I scratch right here, these two trades, I'd be down $27. I think we're copper traders now, Dakota.
Yeah, look at us. Look at us go in this copper. Man, interesting. It's straightforward, easy.
Yep.
Hardest easy money you ever make. And I'm not seeing much else happening in any of these other markets. Looking at crude, looking at the Nikkei, looking around, not really much. Nasdaq, you're in that Nasdaq trade, Coach Jay. That's just not really going anywhere. We're basically where we opened and closed during the New York session, and maybe a lot of the movement's going to happen during the London session or during the New York session. And I'm looking for a slow markets trade, to be honest, because this is my slow markets account now, and that's what I want. Is I want to be able to demonstrate placing trades overnight and letting them run. And typically it's in micros. 50-point stop, 100-point stop is normal when you're trading micros, and you're trading higher time frames like an hourly chart. 50 points is very small on an hourly chart, and you're looking for hold trades for over 6 hours possibly. But I'm not seeing anything set up on the hourly chart. I was kind of thinking that there's a possibility that we could fill this gap down in the Nasdaq to, like, say, the 970s, and then possibly get into a long for an overnight trade setup, but we didn't get that. There is still a possibility for a short Nasdaq trade that I'm actually thinking about as a possibility, and I think I might set that up. I'm going to switch to my charts, and this is my slow markets account, everybody. Here is the first slow markets trade of the year, I'm going to say, in this account. Very first account. I'm going to keep track of this. Everybody in the chat, please hold me accountable for any of these trades going forward. 2025, hold me accountable for any of this. This is slow markets. I'm only allowed to trade this slow markets account during slow markets for overnights. I don't want to be messing it up. Here we go. First trade in slow markets. I'm going to do a rough draft, and then I'm going to try and go through, and this is where we'll finish it because we're running up on time. So this is an hourly chart. I'm looking at the hourly chart, and this is major resistance. Major resistance. This is a major resistance level. You can see we broke down there during the New York session, and it became resistance once more. Tonight we gapped down. We rallied up a little bit, and if we get up to that level, I am okay with shorting this market. So ways you can short it: using stop orders to get in as markets go in your favor, or limit orders. To me, this looks like a decent place to put a limit order. If I'm going to short this market, if we rally back up to, say, this level, to get into a short, and it would be like a sell limit. I'm going to switch over to micros because definitely micros, not minis. So micros, to me, the sell limit would be right near these highs. So I'm going to say 128. 128 for a sell limit. Take profit is going to be, if we get up there, I'm going to be looking for this gap fill. So take profit's going to be 970. We're going to do 970. I'm going to do 978 for easy math. So sell limit 128. Remember, this is just a demonstration. It's not a signal, right? This is for education, just like a teacher does a math problem on the whiteboard. Stop loss, we're going to do a one-to-one risk reward. Stop loss is going to be above the previous pivot. I see that there is a nice pivot. Remember, this is just a rough draft right now, and I'll zoom in and we'll start to fine-tune it. So that's about where I like this trade. Stop loss is going to be for basic math, 238 for stop loss. Entry 128, take profit, 978. And so what is the risk reward? So I'm risking 110 points to make 150. And so on a micro, that's, what is that on a micro? So I'm going to do math on my phone because I just don't feel like, so I'm going to be risking 120 points times $2 a point. It's $240, and I'm okay with risking double that, so I'm okay with 2 micros. So 2 micros at $240. So I'm going to go ahead and do in these settings, and if somebody sees I'm doing it wrong, let me know. So risk is 240, and I'm going to make 250 points, and my reward would be 300. and I'm going to click apply those profit brackets. So that would automatically set my stop loss and my take profit, saying as soon as I get into triggered in, my risk is 240, my profit is 300, which should be aligned with this. And if I do my limit orders, I'll just go ahead and put a sell limit. Oh, I got to delete that. Traders will correct me if I'm doing any mistakes. So sell limit 2 micros. If that gets filled, my stop loss should be at 238, take profit 978. And that is going to be a trade I leave overnight. And we'll see where we're at tomorrow. Thoughts on that, Coach Jay?
Good stuff. I like it. I just went flat on all my trades, but I do like that. I do like the potential for continue short. And you're looking at 128 for your entry. So yeah, that's probably a better spot.
Correct.
And not risking a whole lot either. So I'm flat. Good.
Andrew said I messed up. I calculated for 1 micro, so I need to do double that, right? Yeah, so it'd be 480 and then 600. There we go. There, sorry. Continue, Coach Jay.
No, I'm flat on those trades. On the copper trade, I was actually answering some people in chat, so I kind of missed my take profit. I should have been taking profit at this view up right here. So now that it bounced, I don't love the trade anymore because then we have the potential to trade above this high volume. So I just flattened everything. So down 358 was up about 250 on this copper trade. Perfect example of not trading distracted, right? A lot of times people say, hey, why do you guys trade practice accounts or not live accounts on the show? Sometimes you get into a good conversation with a trader and you're not focusing on executing the trade. I'm not making excuses, but because I should have taken profits and I didn't, flatten everything.
Fair enough. Couldn't agree more, man. Sometimes the being on stream, running a stream, all that can be distracting. I fat finger, I make mistakes. Andrew, obviously, there's another one calculated for 1 micro, not 2. And yeah, tomorrow should be a good day. I mean, yeah, I think after all this, I'm probably going to lock out of my live account. Minus $5,000 for me on a Thursday. But yeah, that's just one day. And I'm going to end it there. Any last words?
Trade well, manage your risk tomorrow before the open. We'll talk about it on the opening call with Coach Ray. And people were asking what time's Coach Ray going to be on. Right at the opening, 7:20 Central Time. We got jobless claims tomorrow morning. And I think a GDP number. Remember, you don't have to trade before that news unless you already end up in a good position. But you don't have to try to guess where the market is going to go from that news. Let the dust settle and let the market present some opportunities to you from there. Trade well, manage your risk. We'll see you then.
Awesome. Take care. Bye.
Okay, new candle just printed. Discussions are over and done with. Okay. So we will put your mighty ox here. Let's see what's going on. This is a do or die right here. We're gonna
The next 48 hours are critical for the market. After breaking out of the do-or-die zone on Monday's gap up, markets have failed right back down into the zone. So if the short-term low is going to hold, and this is ultimately the bottom, then buyers must defend the gap fill reversal level into Friday. Otherwise, buckle up for some new lows. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight on the SPY weekly time frame chart. And admittedly, the weekly bar has not officially closed yet. This is in progress. It is subject to change. However, you can probably already see the concerns that are emerging here. The weekly trend is in the process of flipping to down, right? We had this double top And of course, we've broken the neckline. And by breaking the neckline, we automatically bring in a lower low in the trend count. The next thing we need to confirm a downtrend is a lower high. You probably see where I'm going with this, but the upper wick of the developing weekly bar is a perfect retest rejection so far of the double top neckline. So could this act as the lower high off of a relevant structural level? To me, the answer is absolutely. You'll notice as of Wednesday's close, we're back down inside of the previous week's range. And I would say the most bearish development for Friday's close to finish out the weekly bar would be some sort of close underneath the weekly 50 SMA, which represents the bottom end of the do or die zone because it's also the previous structure from back here, right? We had previous resistance acting as support. Weekly 50 SMA is baked in there. A close below would be the nail in the coffin on the higher time frames, and I would be pretty convinced that an equal low test could be in store for the next couple of weeks. So the higher time frame chart is looking fairly concerning with the caveat that the weekly bar has not officially closed yet. So let's go on down to the daily time frame chart. Let's see what else we can learn here. What's the overall trend of the daily? It's still certainly down. We have highs. We have a soft lower high because we never really flipped into a firm hourly uptrend here. We never had any other hourly uptrends other than what's developed off of the lowest low in the trend count. So could the weekly lower high also be the daily lower high? To me, the answer is yes. Now, there has been a little bit of overshoot of the key level, which is the top end of the do or die zone. It was the daily 200 SMA, the green moving average on our screen, as well as the upper edge of the weekly expected move. But it's all within striking distance here. Now, because we do have a daily close on Monday and consolidation all day on Tuesday above the do or die zone high, I think it's worth acknowledging that stronger sellers didn't really step up at the ideal moment, at the ideal level, so to speak. So we're keeping an open mind that if this is going to ultimately be a trend reversal in the upward direction, if this is going to act as the low on the daily time frame chart, then the gap fill reversal to Friday's high of last week and holding the do or die zone low at 565.50, the weekly 50 SMA we were just looking at, as well as the structural element, that is paramount on the daily time frame chart to consider from here to here a higher low. Because just like this gap up constitutes a soft lower high,
Order
we never really
filled.
flipped into an hourly uptrend here. We never really flipped into an hourly downtrend here to confirm this as a higher low in the daily trend reversal perhaps. So for me, it's absolutely critical that if we're going to become bullish on this market, if this structural low is going to hold, we need to see respect. We need to see buyers stepping up at 565.50. If you take away anything from this video for the S&P 500, it's that 565.50 holds the key to the next move available in the market. Before we get on down to the hourly time frame chart, I do want to bring out the Fibonacci's from the highs to the lows and just call out that although there was some overshoot here, we're still well within the confines of bear flag consolidation in the grand scheme of this move. If we clear this up and drop it down to the hourly, what else can we learn about the possibility of a trend reversal here? First thing to point out is that Monday's gap up is pretty impressive because what it does is it negates the hourly balance. This, all of last week basically, had neutralized the hourly trend. From here to here, yes, you had a higher low,